Well, hello everybody. This is Seth, and it's the Middle Class Investor. Thanks for listening this week. Um, Another exciting week in the market. Not really. It was kind of the range was kind of small, and there wasn't a whole lot happening. But we did make a new high, and that is interesting because it kind of it potentially changes the forecast here. To potentially maybe not in a triangle. We've been talking about how this might resolve itself in a triangle, something along the lines of this, like so, here like this, and then to the upside. So this would be your A, B, C, D, small e, and then up with the new 5 waves. I don't know. This is the market's just notorious for, trying to fake everybody out, and it fakes me out all the time. But this could be what Elliott Wave calls as a flat, where the A, B, C, the B wave is actually higher than the previous wave 3, which is all this right here. The Trump rally, all that stuff was wave 3. In which case, this could come down to just slightly below. Usually doesn't come way below. It usually just comes slightly below the previous low. So this low right here. So if you kind of look at it like this, you can see that maybe we get a stronger pullback next week down into this 23.25, which would be pretty significant. That would be a 60-point move in the S&P 500, and then from there, then we get 5 waves up into this area, new high. Not much of a new high, maybe that 24.75, but maybe not either. In fact, as soon as you break kind of this old high here, you might want to be leery about how much further the market could go. Now, there's another possibility, and I don't know that I like this one as well. This possibility is that this is already this was the ABC kind of pullback right here, A, B, C, and then this is the new trend. Whoops. Then this is the new trend upward. 1, 2, 3, 4, 5. And if that's the case, we could be selling off immediately. So, who knows, really? There's no way to know. What we're really doing here is we're looking for a change in trend. So let's just review that real quick, because that's really what we want to focus on. We have a new high here, so if it comes back to a higher low, higher than these lows here, then what we would expect, even if the market does it up and then down, we would expect to go higher. So anytime you have a higher low, which we do right here, or which we could have right here, then we're expecting the market to turn and make some new waves to the upside. That's certainly possible. I think the more likely scenario is the one where this is a flat and we get a pullback to probably this 23.25 area, and then a new 5 waves up, which could take 2 months to go through. So we'll just have to wait and see. If you notice, day in and day out, the market's not moving much. Since we've made this the quote unquote Trump rally, once this was done, let's just draw it here. This was the Trump rally from here up to here, and of course, ever since then, the talk has been, is the Trump rally over? Is the Trump rally over? Well, maybe. I mean, it could be, but I think it's more probable that we get either a low or a higher low, and then a rally to new highs. So let's keep an eye out for that. And if we have to change our forecast a little bit, then we will. But that's what it more or less looks like to me. Let's go to the VIX. I mean, the VIX is so incredibly low; it's unbelievable. Back down to 10.4, but you can see we even got to this low here. I don't even know what this is, but it's a very low number. You have to go back pretty good ways to find the VIX at a lower number than this low, this touch low here, which tells me there's just a ton of complacency in the market. And I'm going to show you some figures here that back that up in a minute. And that's usually the beginning of the end. The mass exuberance in the market and complacency usually sets us up for a big fall. So, I mean, that is some really low volatility. Let's look at the 13-week Treasury. Of course, we've been talking about the Fed's going to raise rates. There's no doubt about it. The last time they raised, market was down in this area, and we're significantly higher than that now on the 13-week Treasury. So, to me, the Fed's definitely going to raise. There's no doubt about it. Let's look at 10-year Treasury, because that's one that's pretty important. Of course, we had this previous low here, and then when this pulled back, it pulled back to new lows right here. Of course, what we want to do is try to identify a 5-way rally up, and then a pullback, and then that next rally should be a doozy. So what is it looking like right now at the moment? So rates closed the other day at 2.335. It looks like to me that from here it still wants to go down and at least close this gap. So, if you haven't gotten out of bond funds yet and you still want to do it, you still might have a chance at fairly low prices. So be patient. I think a good way to determine, sorry, I keep zooming in and out. I'm gathering my thoughts as I go here. This is a pretty good shooting star looking type pattern. So I would say if we get a candle that looks like that this next week, that's a close below the low of the high day. So this would be the high day in this very short term. This is a very short term bear flag is what you've got here. So for those of you who don't know, here a bear flag is nothing more than a consolidation or a bounce against, assuming this is the dominant direction of the trend. The idea is you get a relief rally, and then you start closing lower highs and lower lows, and you could get a candle like that, and then back down to that, and maybe to that. So I doubt it's going to go that low. I think it'll just close the gap and turn. But I just wanted to show you kind of, if this is a bear flag, then a break and close outside of the flagpole area would be a reversal. And then, rates, who knows where they could go, but they're looking very, very, very strong. So be careful in that market. I've said that many, many times, and I'm still saying it. All right, let's look at some of the other parts of the world. Germany, it's kind of a flat week. You can see here that we've got kind of an inside week going here, which is just where the body of the candle closes inside a large white candle or a large black candle. In this case, a large white candle. It's very possible that this continues up into this resistance zone, and we'll just have to keep an eye on it. Japan's crazy, but you can see here that Japan had a down week. It's not surprising. They're in the resistance area, so it may bounce around here in this resistance area for a while, but then once it's done, it should roll over and go to the downside. So we'll keep an eye on that. The United Kingdom, it's starting to rally above our little blue box, which could be good news. I don't know. I don't have a good feel for United Kingdom. I just don't know. But to me, this looks like this was too deep for just a pullback. So this could be kind of a run up in the first wave, and then we'll see a pullback, and then higher in the third, and so on and so forth. So anyway, those are the markets I like to look at. Let's go to TOS charts. Let's back this out a little bit, and you can see here from the days we had where the market kind of stayed in this triangle and then rolled over and then retested the bottom part of the triangle. Actually went a little further, and it's looking better and better all the time for the shorts, for the bear shorts. Let's see. Do I have the Well, we use this tool here. Let's do Fibonacci retracements. So let's just see how much of this previous trend we've retraced. So the 61.8 or 62% is right around, I think I got the wrong tool here. Yeah, let's just grab a rectangle. Right around this area here. So we might expect, now that doesn't mean it goes straight there on Monday. I mean, we could very well, get a move down, a move down here like so, and then a new move to this resistance area. Kind of like the way the bond market's working right now. There's just no way to know. We just have to wait and see. So hopefully this is where the patience comes in and doing this trading, because it tends to be difficult, and you have to kind of sit around and wait for the right setup, the right look and feel of the chart. So let's see. Let's see, what can I put it on here? Let's put it on. Let's put it back on a daily, and let's expand this out so I can look at my instruments. So this is the ES. Of course, it looks a lot like the other markets with some minor deviation. If I'm I didn't mean to click on the euro again. I was going to push. Where's the British pound? Don't see the British pound. Well, maybe I took that off. No, here it is. No, that's JPY, British Pound JPY, which would be interesting. It should be kind of, no, it's kind of making a little ABC up. Um, whether it actually works or not. Is this in a bear market? Is this in a bull market? I don't know. We'll just have to wait to see. Um, you know, we'll wait and see, but there's quite a bit of excitement in this downtrend here, which is usually the direction of the dominant trend. Let's look at gold / GC. And you can see that gold is in some sort of pullback or something here. It made a trip up, kind of pulled back, made another trip up, it's pulled back again. So I would say that it's at a place where it really needs to hold here if it's going to go higher. Yeah, there's really no, just having it go lower from here. I mean, it's already moved quite a bit, so we won't talk about what would happen if it moved lower or whatever. So the interesting thing about gold and silver is just there seems to be a lot of talk about inflation, and there's two distinct camps. I mean, there's people that say there's absolutely no inflation, and then there's people that say, oh yeah, there's inflation. I mean, I go to the grocery store and everything's more expensive, blah blah blah, so on and so forth. So this fall right here, and part of this rise and this fall are are all part of some sort of counter trend rally. Now, if we back out, this is maybe the easiest way to to see it. So let me back out even more. Let me go to a 20-year monthly chart. So let's just recap gold. Okay, so the gold rally began way back here in 1999, and it's been up, 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 and away. So what do we know about, let's call this a wave one. Well, if this is a wave one, we know that we're going to pull back in A, B, and then C, right? Of course, again, there could be a different pattern here. It's just that this looks pretty good, and also this low right here looks like the kind of area that this chart would pull back to. It's already a low right here, so just keep an eye on that and trade it accordingly if you feel so inclined. What I'm trading mostly, for those of you that are interested, is well, let's just go over and look. Yeah, that's not the right. I'm trying to think of what I want to do. My mind's not working. It's very late in the evening, so I'm kind of getting tired. But if this is the first move up on gold, and we're looking for an A, B, C pullback, then it would stand to reason that gold might pull back all the way here to the $700 range. And of course, silver will pull back similarly. So I think that's about it. I want to show you these charts because there's some other measures of risk in the market. And so what I want to do is I want to show you the some of this Elliott wave stuff. So you can see here that Elliott wave thought we were going to have a triangle also, but this chart's a little bit old information. The old bullet actually came up and made a higher high. In which case, this is probably A, B, C, and then we would take off. So anyway, I just wanted to show that. I mean, these guys at L8 Wave are really good. If any of you are interested in subscribing to them or whatever, I highly recommend them. This is an interesting chart. This shows the complacency that we were just talking about. So you can see, here's our 5 waves up, and this is a huge scale here. I can't remember what it was, but you can see here's a 1, 2, 3, 4, or up 1, back 2, up 3. You can see how much longer 3 is than 1 or even 4 in this case. So, but notice over here, this area right here, whoops. Let's try that again. So this area right here, 52.1%, is the percentage of bulls in the marketplace. And so really what happens is there's this constant tug of war going on with price and the number of shares and this kind of thing. And so, what this is telling us is that people are very excited about this S&P 500 market, and they think it's going to go higher. But we've discussed here before that new bull markets do not start from high areas on the chart. So I just want you to be aware of those types of things, so you don't, chase yield or something like that. This is another interesting chart on silver. I mean, look how high the commitment of traders, money managers, is way up here. I mean, they're just piling into silver and into gold. And I probably don't have to tell you that when everybody starts running a particular direction, that usually means you should run the opposite direction. So, and then here's the U.S. dollar, which I thought would be good to show, just because it just seems like forever we've had any kind of update on the U.S. dollar ever since they took it off my charting system. But you can see we have this, basically it's a reverse head and shoulders. I mean, here's a shoulder, here's a head, there's the other shoulder. And if this breaks down below this diagonal line here, then we more than likely have got some sort of larger correction taking place. So we'll just keep an eye on it, see what comes up, and we'll go from there. All right, well, if you have any comments on the show or you want to say something about the show, just go to the comments section under this YouTube blog, and it'll go to either my phone or it'll go to my email, and I can answer it to you directly, whatever your question is, or comment if you have some comments. The other way to kind of follow me is at Investor Class, so it's the @ Investor Class. I haven't been as active on there lately as I would normally be, but I've just had a lot of things going on, trying to prepare. We got Mother's Day weekend. There's just a lot going on for me right now. So, anyway, those are all excuses. But the market is very, very complacent right now. It could have already topped. It's not likely, but it could have already topped. And again, try to get the last little dollar out of out of the overall market is probably not the the wisest thing to try to do in the market. It's probably more um, conservative or wise to just ask yourself, what are the odds of the market going much higher from here, or better yet, what are the odds of a new bull market starting from here? And I'm of the opinion they're not very high. So anyway, I guess that's gonna do it for this week, y'all. Let me put. So I put the ES back up, but on the toss charts, and you can see it's kind of cool here looking at the black background. But you can see that the market's still fairly strong. I mean, it's holding its own, so to speak. So yeah, this looks really good. And let me take it off a month and go to like an hourly. There we go. So this could be your A. Now we got B going on here. I tell you what, that ES looks so much different than the broad market or the cash market. It's frustrating to look at it. But anyway, that is it for this week. I'm starting to ramble. It is late. I'm getting sleepy. If you want to comment on the blog, just do so on the YouTube channel. Or, if you've got a Twitter account, you can find me there on @InvestorClass. All right, everybody. Thanks for coming in this week. Until we see you next week, take care. Happy Mother's Day. Enjoy your families and be safe.